How's it going, everyone? It's Sam. Today I am buying 4 stocks that I plan on buying and holding for a very long time, possibly forever. And I just wanted to say thank you because this is the 1,000 sub special. We hit 1,000 subscribers a couple days ago. We're already at 1,250 by now. And it's just amazing to see how everything's growing and to be part of this with you guys. So as you guys probably know, I was investing $5 for each new subscriber from 86 subscribers up to 1,000. So about $4,500 I was going to invest. And this is the 1,000 sub special from 800 to 1,000. And this is pretty exciting for me because now I get to be monetized on YouTube. I am applying for it right now. I'm just waiting to hear back. And it's cool just to get to 1,000. It's a nice round number there. So I appreciate everyone that's joining. For everyone that hasn't joined already, please hit subscribe and hit the like button. Really helps out the channel. And I'm going to break down each of these 4 stocks that I am buying and just talk about them a little bit for each one, where the price is now, where it's been, if there are dividends, and what kind of discount you're getting, because while the general market is back up to just about record all-time highs, the NASDAQ hit all-time highs on Friday, we still have stocks and companies that are down significantly from where they were a couple months ago. So I think there's still good deals out there. With these 4 different stocks, I really feel good about these. These are companies that I believe in and am excited to buy and hold for the long term. With some of my companies, I think that they were just at such a good discount that they present a great value, or I think that over the next few years they'll do quite well because they'll be able to grow massively. But 3 of the 4 of these companies are just massive companies, and I think that they are staples in the US economy, and they'll be able to continue to present value 10, 20, 30 years down the line. And then the other company is a little bit smaller but still provides a great amount of value. So first, the stock that I want to talk about is Tesla. So if you don't know about Tesla, they make electric cars. They are the largest electric car manufacturer in the space. They had really good numbers for Q1 of this year, selling more cars in California than any other car with their Model 3. They also have lines of business that make batteries, that make solar roofs, that make semi-trucks, that make pickup trucks in general. They're coming out with one of those. They have some of the best performing cars in the market, and part of that is the fact that they have electric cars, so they accelerate really quickly. They also have really nice technology and a nice design, and for the first time over the last year, they've really made a profit, and before that, they were just focusing on growth. But I think that they have really good things in their future, and I invested in them a few weeks ago, and it's gone up 10%. That's not why I based this decision on to put $250 in Tesla, but it's something that happens again and again with Tesla, where a lot of people think they're overvalued, so they don't want to invest in them, and that was me for a while. But then they come out with good news and they jump up in price even more. Some people are saying that Tesla is a $3,000 stock in the next 5 years. Some are saying it's a $5,000, $7,000, $10,000 stock. And if it hits any of those, I'll be very excited. You know, a 4 times return over the next 3 years or 5 years is quite good. I would take that any day of the week. So they're the first company that I'm buying. The second company that I'm buying is going to be in my Roth IRA, and they are Realty Income. If you don't know about Realty Income, they are a REIT, which is a real estate investment trust. And they are a company that has a lot of different tenants. They do all triple net leases, which if you don't know about those, I don't blame you. It is a type of lease that's over 10 to 15 years, so they're really stable. These aren't like 1 or 2 year leases that they have with their companies. And I know a lot of people are worried about Realty Income because of the fact that a lot of companies might go out of business. A lot of people aren't making money. But Realty Income has signed these people over 10 to 15 year terms. The government has provided so much stimulus that I don't really see companies going bankrupt in the near future. A couple companies have gone out of business, but I think there's so much support right now that it's going to be easier than, let's say, 2008 for companies to stay afloat. And Realty Income has had really good numbers. So last month they collected 83% of rent, which is quite good. And then on the other 17%, they were working on deferrals for those companies. So they're not talking about just letting them go without paying it. They're talking about either deferring it into the future, setting up a payment plan. So I think that's a good sign. And from their highs, they were up to about $83. and now they're at $62. So I started buying when they were at 50. Should have bought more, really, but they were down to about $43, $44. Now they're back up to 60. They're still on sale for about 25% off, and they do pay a nice dividend. So they pay about a 4.5% dividend. It is a monthly dividend. So every month you're going to receive this dividend. They're a dividend aristocrat, so they've grown their dividend over 25 years every year. And they've been able to grow annually at about 4% each of the last 5 years. So their 5-year growth rate, 4% a year, which is really good too. So I think that they'll continue to try to up this to stay on pace with what they've done in the past. And it will be just nice to see those monthly dividends. And I think that they'll have some nice price appreciation into the future, because I think that they'll get back to where they were and continue to grow and continue to increase in price. And then before we go on to the third stock, I want to say please again hit the like button and the subscribe button. And if you are interested in investing in any of these stocks, consider using one of the links below. If you deposit $100 with WeBull, you get 2 free stocks, and then I also get 2 free stocks. So it really helps out the channel. I appreciate it. So then the third stock that we're going to look at is Disney, and I will apologize because I didn't explain this earlier. I couldn't actually invest in these yet. I couldn't show my screen on this video because with Robinhood you can only invest so much and get instant credit for the money that you invest. So I have to wait for it to settle. So that's just a little disclaimer if you were wondering why I haven't been putting up on the screen. But the third stock that I'm investing in is Disney, and they're a company that I see just being a staple of America. When you think of so many movies that we see, a lot of them come from Walt Disney. When you think about Disney Park, a lot of people go there every year. It's just in our culture that someone wins a championship and they ask, where are you going? I'm going to Disney World or Disneyland or wherever it is. So I think that with that, and then also with the addition of Disney Plus, which is their streaming platform, which is going to be a massive player in the streaming market. I think it will rival Hulu, Netflix, Amazon Prime, and they all have their different niches, but I think that Disney Plus will provide a lot of family content to a lot of people, and people are willing to pay for that. So they've already grown over 60 million subscribers and 60 million monthly users. So I think that they'll continue to grow. That'll be a massive source of profit going into the future for them. I know that they've suspended their dividends, but I'm okay with that because they have had their parks down for so long. That was a massive moneymaker for them. And I think that that part of their business might be in a little bit of a lull when it comes back. Like it might be a little bit slower. But I think that generally people that go to Disney World are going to go to Disney World no matter what. People are excited to go. So I think that they'll still get a lot of people going there. Now, they are down significantly on the year still a little bit. They were above about 151, 152 a share back in November of last year. Now they're at 125. But since then, they've been able to add Disney Plus, which is going to be massive for them. And like I said, they're still down about 20%, between 15 and 20% since that time of the year. And then they will bring back their dividend eventually, and it pays about 1 to 2% each year, but they've been able to grow it relatively quickly because of the fact that it's so low. So it's been growing for 10 years in a row before this all happened and they cut it, and it was growing at about 9% a year over the last 5 years. So that would be nice to see it come in every 6 months into my account too. And then the last stock that I am going to buy is Berkshire Hathaway. So if you don't know Berkshire Hathaway by name, it is the Warren Buffett company, essentially, right? So it's Warren Buffett's company. It holds so many different businesses in it. It's not recession-proof because a lot of the companies that they own are going to be hit massively from everything that's going on in the economy right now. But it's still just a massive powerhouse of a company, right? So they own different companies like Geico, like Duracell, candy shops, different railroad companies. They own essentially 50 or 100 different businesses, and then they own massive stakes in a bunch of other companies too. So just looking down the list here, they own about $1 billion of Amazon, $18 billion of American Express, $78 billion of Apple, $23 billion of Bank of America, $4 billion worth of Bank of New York Mellon Corp., $2 billion of Charter Communications, $1 billion of Costco, and that's just A through C, right? So they own billions of dollars of all different kinds of companies, and this really helps diversify their portfolio. And a lot of people don't like Berkshire because there isn't massive growth. So compared to a Tesla or a Facebook, they don't grow as quickly. but that isn't their goal, right? So they have a lot of shareholders that have massive amounts of their net worth in Berkshire. So they don't want to necessarily invest all their money in these big growth companies. They want stable companies that are going to pay them out nice dividends or provide a good value. Hence why they've held on to large dividend payers like Coca-Cola for generations, and why they continue to buy companies that they think are at a discount even if they don't provide that massive appreciation, like I said. So their goal is to provide 8 to 10% in book value appreciation each year. So they want the book value of their company to go up 8 to 10% because they feel like that is the best way to really pay back their shareholders. They don't want to pay dividends. They want to just appreciate in price. And I think that they are going to be something that helps me if there is another downturn, that Berkshire will hold steady. And the fact that they hold $130 billion worth of cash, just pure cash on their balance sheet, is massive. So if we go through another recession or the economy takes a dip, and let's say the government stops providing stimulus or provides less and companies start going under, well, Berkshire is going to have a lifeline, and if they can pick it up for cheap enough, they're going to get some massive value out of that cash that they're holding. So that is something to think about if you're thinking about companies that would do really well in a recession. Berkshire is going to probably take a little bit of a hit because of the companies that they own. They will earn a little bit less money. But once we come out of that recession, they're going to be so strong because if they feel comfortable, they're going to pick up companies that are at a good value. Think about that if you're thinking about something to kind of hedge against the economy going down again. Let me know what you guys think of these picks below. I invested $250 in each of these. I will continue to invest more each week, but as you know, I've been investing $5 for each new subscriber. I'm not going to do that going into the future because I can't afford that. We're growing so fast here. We grew 250 subs since just Thursday night, and I think we're going to hit 2,000 here in the next few weeks. I would really love it if it was even less than 2 weeks, but I think that we're going to continue to grow. You guys are awesome, and you continue to hit that like button, which really pushes out to more people, which is awesome. But let me know your comments below. What do you think about these companies? What are you buying? Are you holding? Are you waiting to see if stocks drop again? After days like Friday, it's been very nice to be in the stock market recently because we saw the whole market go up. I don't think I had one stock that went down, and I showed that in a past video. So those kinds of days get you really excited to invest more. But do your own research on these companies. Don't listen to only my advice. I am not a financial advisor. I'm not a professional stock picker. I'm just a guy that wants to help you on your financial journey. So I appreciate it, and I will see you in the next video. Bye.